Hi friends, today we are going to discuss about five different ways you can raise funding or any startups, how do they raise funding to grow their business. Okay, let's talk about there are five different ways. Some of the terminologies you might have heard about these before or you may not have heard. So let's talk about these five different ways, the startups get their funding. So first is bootstrapping. Okay, if you are not familiar with this word called bootstrapping, so bootstrapping usually you will find it or you will come across this terminology when you are talking about new startups. So that means companies which are recently started. So bootstrappings are where the founder of the company, they invest their own little kind of a capital in their own business. That's bootstrapping. Or in it is in a way whereby they don't have to take a lot of investment out, or raise money or take a lot of bank loans or something to start their business, but it is a kind of a self-funding, okay, exercise, whereby they are getting the money from outside, that means from selling of their services, and then they are investing that in their own business. That's called bootstrapping. So that means it's a sort of a lean way to get your business growing. That is called bootstrapping. Second is angel investment. Angel investment is when you get hold of angel investors. Angel investors are the people, kind of a high net worth individual. So people who are having, let's say $1 million net worth or more. Usually they are called, the high net worth individuals, and you can raise a funding from them. Okay, angel investments. Again, this is again an initial phase. Angel investment is really good as well. It's a good form of investment to get your business growing. And a good thing about angel investment is, well, why would they pay you money is because usually they get a stake. That means they you have to issue, or this startup business has to issue them their equity. That means they will be part shareholder of the company. Okay, so angel investment. So angel investments, in a way, it is kind of a good, in the sense that if you have an angel investor who is kind of a quite familiar with this industry which you are in, if you are the startup company, then that's kind of a mentorship inbuilt there as well. So that's a good way, whereby they want to protect their money as well. So that means they kind of supervise and see that business is growing as well. In a way good, in a way bad as well. Bad in the sense that because they have stake in your business, so they wanted to steer it in a certain way, and the founder of the company may want it to get in different way. So there may be a bit of a conflict, but that's a way you can raise funding. It's called angel investment. Okay, third is venture capital funding. Okay, venture capital funding or VC funding is when you are not talking to, or you are not getting the finance from one individual, but there is a group of people. Okay, so they are called venture capitalists. Okay, so these are kind of it's a venture capital fund, or there are quite a number of people who invest in your business or in a startup. Okay, again, venture capital funding is also good in the sense that if the business loses everything, okay, what happens then? The business doesn't owe anything, and that's kind of a bit risky proposal for venture capitalists as well, but it is good for them as well, because if they believe that business model is quite good and can be successful, and they will be the stakeholder or the shareholder of the company. That means if the business grows big, then they are the one who reap the highest or maximum rewards of the success of the company. So venture capital funding, again, we are going in the order of bootstrapping is a bare minimum. Angel investment is a bit of a money you are, getting in. Venture capital funding is when you are looking at kind of, in uh, lesser than 1 million, you could say, venture capital funding, or a couple of millions, you can say. But when you go to series funding, the fourth one is series A, B, C, D, and that is, any n number of series funding you'll be getting. So what is this? So series A funding, for example, you might have come across this terminology. So that means that the first round of funding. Okay, so that means series A. So multiple rounds of funding you are getting from who? From people. Okay, so that means a lot of companies, they go for series A, B, C, different kind of funding, for from different investors. Okay, so that means the people who have the money, they want to invest in the company, in exchange of, again, in exchange of the equity in that company, or the shareholding of that company. So they are the part owners of the company. Okay, so series funding, sometimes, like the valuation of the company is kind of determined based on the funding what they got. For example, a company goes for a series D funding. Okay, and the series D funding, when it happens, so that the company gets evaluated based on, kind of a deal between the funding, the whoever funded, and in exchange of what kind of a shareholding they are going to get. So based on that, the company's valuation goes up as well. And that is usually the time when you say that, okay, a company went unicorn. What is unicorn? Unicorn is nothing but $1 billion valuation. If a company gets that, becomes a unicorn. Okay, so through these different series of funding. And the last but not the least is IPO, initial public offer. IPO is when you are going public. That means your company or the startup is going so big, it decides now to open it to the public. That means it will be, initial public offer is where anyone can buy the stocks and shares of the company, and the stocks and shares will be listed in stock exchange. So that means it will be bought and sold in the stock exchange, and that's called an IPO. Okay, an IPO is kind of a bigger money there, and a lot of money a company can raise through IPOs. And there are companies who go for a global IPO as well. So that means people from all over the world could invest in that company. So that's sort of a different ball game altogether, where you are playing at a much higher level. So these are the 5 different ways you can, or a startup funds their business to grow it. Okay, hope it made sense to you guys. With that, I am done. My name is Som Prakash. I am a business coach and a consultant. I love helping people to grow their business, to become profitable and successful. If you have any questions on this video, please feel free to message me, and I will be more than happy to help you out or answer your questions. With that, I'm done. Over and out. Bye bye.